Hello investors. The month of April has been a month of consolidation for the markets and for your portfolio. And it's very good because after the stellar March, it's very important for the markets to stabilize and consolidate before they begin the next up move. This consolidation is what solidifies the trend and keeps it as a base for the next up move. However, the month of May has its own challenges. On the back of very strong global markets, the US markets, the S&P 500 has made a new lifetime high, the Nasdaq has, and the Dow also is almost nudging it. In this scenario, we have a month where we have a very important national event, which is the elections. And they, for me, in the short run, will determine the shorter term trend in the market. Though the longer term trend is going to be driven by fundamentals, by earnings, and what is the global liquidity flow. Most people think that it's just a binary outcome, that this election is all about whether Modi will come or not come. However, when I look at it, though I'm no political observer or a specialist, but I think that there are much more variables to this. I think that there are four possible outcomes. And it is important that I align your portfolio, or I would say prepare your portfolio for the possibility of these to come. The first scenario is obviously what the market wants, is that the NDA has an absolute majority. And if some such event happens, you will see that you could see a post-election or post-result rally. A lot of investors, a lot of individual investors are hoping to come in then. But I feel that the market would be so fast that most people will not be able to catch the move. The second outcome is that you have NDA that gets good numbers but will need outside support, will need support of more allies. Again, this is something which may lead to short-term volatility till these new alliances can be set up. However, the market will not view that as badly because increasingly there has been a lot of narrative and a lot of talk about the fact that coalition politics in the past have not been so bad for India. So that is the second scenario. The third scenario is that surprisingly, if the Congress does well and the NDA doesn't get the required numbers with its allies. In this case, I feel that you could have maybe a Congress-led government with support from regional parties. This may be a little disappointing for the market again in the short run, but people will again rationalize it and say, well, that this is a beast that knows administration, which has been in power, and hopefully they will pull it through. However, what the market fears, and which is really the Achilles heel for this market, is the fourth option, that you really don't have neither of these two major parties being able to form a government. And you have regional parties that come together and come in and make a government. This is something which I think the investors would fear, which I think would cause panic in the short run. Now, in such diverse scenarios, how are we viewing the portfolio, or what are we planning to do? I think that we are geared for most of the situations, at least the first three, because what you can do, or what I can do really for you, is that either I can be fully invested, which is scenario 1 or 2, or a little bit of cash in scenario 3, or a very high level of cash, which is scenario 4. So as we stand today, we are more inclined, or your portfolio is more inclined towards scenario 1, 2, and maybe even scenario 3. Scenario 4 is something which is very difficult to sort of be prepared for, because it is at such divergence to the earlier three that you be either in this bucket or that bucket. So as I have navigated your portfolio, we are prepared and we will benefit if one of the first three happen. However, if you look beyond elections, assuming things don't work out very well, the market goes in for a very big correction, we have seen repeatedly that whatever the election outcomes are and however bad it has been, it does have a short-term effect, but the long-term moves of the market are dependent on two things. In the intermediate trend, it is about flows. And as I said earlier, that thanks to the big run-up in global markets, FII flows are still positive. In fact, going into an event, they are still very positive. In fact, it is the domestics that seem to be having a question mark and seem to be having sell figures. So flows are going to be important, global markets are going to be important, and what I think is even more important is the kind of numbers that are coming out. So I'm happy to say that as far as our portfolio goes, most stocks, barring one or two here or there, have come out with good numbers so far. And that is very, very heartening, because that gives us the confidence that, well, yes, you may have an event which is very unpredictable, and whatever you do, you really can never be prepared for such an event. But yet, it is numbers that will ultimately hold out. So, we have a portfolio where the numbers coming out are good, and that is really what is giving out the confidence. So, to sum it up, it's going to be a challenging month. We are, as usual, going to be extra watchful this time, because not only do we have elections, which is going to be a short-term volatile factor, in the intermediate trend, we are going to have foreign flows, and as far as the longer-term trend goes, it is ultimately performance and numbers. So, on that note, I continue to reiterate that we continue to stand with our philosophy, our belief, which is about riding the trend, and wherever it doesn't materialize, we have no ego or no sort of hesitancy in being able to cut those positions, booking those losses and moving on, because at the end of the day, the trends will continue and money is always made in these kind of trends. Trend following is our style, trend investments is our style, and we continue to maintain, stick and persist with that philosophy in the wealth creation journey with you and your portfolio. Thank you.